Welcome to the Fuller Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:09 p.m. That is Central Time, and today is February 26th. Well, I thought that we've had a rather interesting day today and a little bit of a rotation going on because several of the AI hardware related stocks have started to pull back from really quite significant overbought conditions. And then some of the software shares where we've had a great deal of negativity being expressed began to find support. I think we can put the catalyst for that at Nvidia's earnings followed by Salesforce's earnings. On the one hand, you have Nvidia, where they made a very positive statement about the expected demand growth, but they also said they're going to spend a bit more money on uh, really paying Taiwan Semiconductor because of the expense that they're going to have in producing all of these chips. And they need to hold a bit more inventory to ensure that they have ample supply. So obviously those are costs. But on top of that, the revenue growth is moderating. Now you might well say, well, how could it do anything but moderate, considering how large that number is? But that's just not the way that investors wanted to see a company valued at $4.5 trillion. At the same time, you had Salesforce, and what they came through and said was, you know what, we really like our business. We think we're doing very well. And we might be making about 40 billion now, and we anticipate that it's going to be over 60 billion by 2030. That we're going to buy back $50 billion worth of our shares and we're going to raise our dividend. And by the way, our AI service, it's an inconsequential part of that 40 billion in revenue now, but it went from 500 million to 800 million in the last quarter. So it's growing quite quickly. And by the way, we're also taking some of the customers from some of our competitors. So that was enough to sort of move the metrics one away from the exceptional negativity regarding the software sector and really to take some of the luster off of the hardware sector. This is not the first time we've seen a little bit of a rotation, and I suspect that that is one of the reasons why the Nasdaq was in negative territory today. Now, what we've also seen is that the transportation index, having been range bound for about 4 years, has broken on the upside. It's being led higher by FedEx. And even UPS, which had been trending downwards for years, has now rebounded and is testing the 1,000-day moving average. And several of the shipping companies are doing particularly well, and even some of the airlines are doing well. So that also tells us that it's not just hardware that might be rolling over and some of the beneficiaries being software, but also the physical environment seems to be doing pretty well as well. And it's not as if artificial intelligence is quite ready yet to take on the physical environment. Of course, that is the objective.